Hello and welcome to the Islamic Finance Show, a brand new program that aims to introduce and explore the often complex world of Islamic finance. My name is Sahel Nawaz, and throughout this series I'll be finding out exactly what Islamic finance is and how it fits into the mainstream. We'll also be examining other important areas such as Islamic banking and, of course, mortgages. Well, let's get straight into it. Joining me on the show today is the CEO and founder of Simply Ethical, and he's also the author of Mastering Islamic Finance. His name is Faisal Karbani. Welcome to the show, Faisal. Thank you for being with us. So there's so much to talk about. Let's get straight into it. Let's start by something that may seem very simple and foundational, but what is Islamic finance?
Well, I suppose as the name suggests, it's related to the Islamic faith.
Right.
As is often stated by Muslims, Islam is a complete way of life.
Yeah.
It doesn't just deal with matters of worship or private worship. It encapsulates all forms of all dimensions of our life.
Right.
And finance is no different. So essentially, it's the rules pertaining to our financial dealings, business and trade. That's what represents Islamic finance.
And what differentiates it? I mean, what's the Islamic aspect? I mean, what is it? How is it different to, say, traditional finance?
Sure. So essentially, the rules within the Islamic law, the Sharia, which we obviously derive from the Quran and the Sunnah, essentially stipulate a number of areas which we need to take note of when it comes to our dealings in finance. I suppose the most sort of obvious thing that most people talk about is this prohibition of what's named in the Quran as riba. Riba is often translated as interest.
Interest, yeah.
Yeah. So essentially, it comes back to how money should be used. Money in Islam should be as a store of value and a medium of exchange. But what we see in the modern financial world is that money is essentially traded for money at a rate of interest. And that's what's prohibited in Islam. So that's one of the key differences. There are other stipulations as well. I mean, one of the other key obvious ones is that a Muslim mustn't trade in something which is prohibited by the Sharia. For example, pork or alcohol. So again, that's another set of rules around that. There are a couple of other big areas as well. One is often referred to in Arabic as gharar, which is uncertainty. Again, a very simple concept around...
So like risk?
Not quite risk. It's essentially when you have contractual dealings between two parties on a commercial basis, what this principle is all about is that there mustn't be any uncertainty in that contract when it comes to what is being purchased, what is the price, what is the delivery time.
Yeah.
Again, what is the reasoning behind that? It's essentially to stop two parties quarrelling or coming to a dispute as a result of uncertainty or ambiguity in a contract. So these are obvious basic things, and within that another rule is around gambling or speculation is not allowed.
I mean, these points that you mentioned, they seem particularly poignant for modern times. Gambling is openly available. Risk and the traditional financial market is a global framework. So I mean, it's interesting that of course Islamic finance is derived from principles from thousands of years ago. Is it as applicable now as it was back then, and vice versa?
Yeah, this is.
Or has it changed quite a lot?
The reality is that we have timeless principles in the Sharia, which are there till the Day of Judgment, essentially. How we apply them essentially does change over time, because the modern financial world and trade as we know it today is very different to what happened 1400 years ago. So essentially the modern financial Islamic finance industry is all about taking those principles and applying them in the modern context. So the principles haven't changed, but the application perhaps has changed, because trade as it is done today with the technological advances we have, etc., is unrecognisably different to what it was back then.
I mean, with advances and innovation in the financial sector, particularly with technology, like you mentioned, the movement of fintech at the moment is really growing globally. It seems like the format is changing on a daily basis. But who decides, or how is it decided, how those principles continue to apply? I mean, it's one thing to say that they are timeless, but who decides effectively how they apply in the modern context?
Yeah, I think this is essentially the application of those principles is a big challenge for the industry. So in answer directly to your question, essentially we have scholars who are trained and versed and knowledgeable about the Sharia, and then they have to be the people who are essentially taking the lead when it comes to applying those principles to products and services in the mainstream. The challenge, I say, is there because you often have scholars who have been trained very traditionally. Then they have to understand the modern financial and business world to apply those principles.
I mean, that's a key contention, that are they versed in both aspects? Industry
recognises that, and there is a number of things happening in the industry to train scholars in the modern financial system and business dealing. So bodies like the Islamic Finance Council have courses specifically for scholars on educating them on the modern financial system and the business world, so they understand the context in which they need to apply these rulings.
I mean, the objective behind that is to ensure that the scholars are equipped enough to make products that individuals living in the West can utilize in a way that's favorable enough to them to not want to use the alternative traditional Western products. Do you believe, or do you feel that Islamic finance has developed enough to provide products that are competitive, or are they not? Where are we at with that?
Yeah, it's a very good question. I think the first thing is scholars don't make the products. Scholars are there to advise on the Sharia authenticity of products.
So they decide whether it's halal or not.
Exactly.
Right.
So what you have is practitioners, bankers, people who want to start certain businesses or have certain products in the market, who will design products or say, these are the products, we want these features in the products, and then the scholars will advise them on whether these products are halal or what they need to do to make them halal. So there's kind of that type of relationship. But in answer to your question about, the products in the market today, and are they really providing an alternative?
Yeah, are they effective?
Yeah.
Or are they just, I mean, to give you an example, say I'm a bank and I have a really popular mortgage product. I might just go to the scholar and go, look, I don't really want to change it, it's really profitable, just make it Islamic in some way so I can tick the box.
Yeah. It's a really important area you've touched on, because I think, in my book I essentially traced back this journey and the evolution of Islamic finance in the modern times. So, if you trace back the modern movement of Islamic finance, you can probably go to the sort of 70s, 80s, when there was the petrodollar boom in the Middle East, caused a lot of wealth, and that led to a demand for Sharia-compliant products in the modern era. And then you see that expansion happening around the world. And where the modern Islamic finance movement started is essentially, trying to mimic conventional products but make them Islamic, because there's all that heritage, all of that legacy of conventional products there. And so essentially the first port of call was to try to produce products which almost behaved in the same way as conventional products but were Sharia compliant. Exactly. So this is, I take it very much as a natural evolution that you would probably go through in any industry. You essentially copy off what's already there, because there's essentially hundreds of years of experience there, and then you try to mould something which is what you want. But so we went through a phase of mimicking.
I'm sorry to interrupt, but critics argue that this mimicry is still ongoing. It's continue to go on, and the sort of question that comes to mind is: will Islamic finance be able to create a product that is truly unique to itself, rather than just a stamp of approval? Will it come into its own anytime soon?
Sure. Again, a very important issue which is well discussed and widely discussed within the industry. And I think we are sort of 30, 40 years in, and there's a lot of good stuff happening now about saying, look, Islamic finance needs to have a distinctive value proposition based on its own identity and be bold enough to be different. So saying, conventional mortgages work in this way. We have a system of finance for buying your own home which works in a different way. It is different. You may like it, it may be more expensive, but essentially we believe these principles are fair and robust and provide an alternative to conventional finance. And that's where a lot of people want to see the industry go in terms of the next step of the evolution of the industry. And I think there is things happening in that space.
What are the challenges? Why aren't we there yet?
I think it's education, awareness. There's a lot of skepticism. I always say to people, when you mix religion with money or business, it's a dangerous cocktail, because essentially, when you put something out in the market and you say to people, hey, look, I'm in accordance with your faith, come and buy me, but I'm going to make a profit from that, people are naturally skeptical. Oh, hold on, are they really authentic? Is it really something which is Sharia compliant?
Yeah.
And this has certainly happened in Islamic finance, where people have questioned, is it really authentic? Is it really in compliance with the true principles in essence?
The traditional mindset is one of skepticism, one of, oh, hold on a minute, this seems a bit strange, it feels like a bit of a sellout. I mean, once people do begin to buy into it, which usually is through the recognition, oh, this is a trusted scholar, I can take his word for it. Once they do begin to buy into it and look into the small print at the bottom, they begin to realize that it's actually quite expensive. So, I mean, that seems like, to me, one of the, in addition to education and the other challenge you mentioned, that seems to be a challenge as well. Is Islamic finance cost-effective and competitive in today's market?
Yeah, so, you know, Islamic mortgages, I mean, you're going to have a whole session on that, I'm sure, during this series of programs. But essentially, Islamic mortgage is a good case study when it comes to cost, because when Islamic mortgages came into the market, and if you benchmark that against conventional mortgages, they were considerably more expensive. I remember doing that myself 10, 15 years ago. As you have built scale, as you know, things have evolved, you have seen them Islamic mortgages become more competitive. So to the point where I did a bit of research probably a while ago now, but if you compared a conventional capital repayment mortgage versus an Islamic Sharia compliant home finance purchase plan, they were not too dissimilar in cost. So it's a case of having scale. I mean, you've got the big players in the market providing mortgages who have hundreds and thousands of mortgages.
Budget.
Exactly. And they, you know, one mortgage they sell, they make X amount of profit, but they're making thousands of sales.
So they're able to,
Exactly. So it's a scale.
Hold that thought for me. I really want to go into benchmarking as well. You mentioned it. We've got a quick break and we'll be right back on that. So later on, we'll be looking at what choosing Islamic finance over the mainstream means for the average consumer. We'll also take a look at its future and how Islamic finance will handle fundamental issues such as Brexit. These questions and more right after the break. Don't go anywhere. Hello and welcome back. Before the break, we looked at the basics of Islamic finance and how it stacks up against conventional finance. Still with me in the studio is CEO and founder of Simply Ethical and author of Mastering Islamic Finance, Faisal Karbani. Again, thank you for being with us, Faisal. So let's get back straight into it. Benchmarking. We mentioned it right before the break. Now, there's a common misconception. Well, actually, you can clear it up whether it is a misconception or whether it's the truth. Benchmarking relies on this idea that we measure the Islamic financial product against an interest benchmark. I mean, that sounds haram to me. Is that allowed? What's going on?
When it comes to banking, the regulator, the FCA, has stipulated that banks have to basically price their products in a way which is comparable to other banks.
Right.
So when it comes to things like mortgages, the regulator has enforced this upon the banks. So it's not something that the banks themselves have chosen to do, but by being in the system that we're in, they have to adhere to the rules of the system. So what you see is, you know, Islamic finance products are advertised often to say, you know, effective rate of return or rate of interest is X, but there is no interest. So it's the very thing that you're trying to say is haram and prohibited, you are essentially referring to in your pricing, which is almost an oxymoron in that sense, and people get very put off by that.
People get put off by that, don't they? I mean,
of course they do, because it's something that is haram, the interest is haram. But
it's like me saying, I know you come here to buy a kilo of halal chicken, but let me just compare it to that haram chicken I've got sitting there.
Exactly. And the very first book I read on Islamic finance by Mufti Taqi Osmani addressed this point about him saying in that book that if you've got someone who is pricing soft drinks in the same way, benchmarking that against how alcohol is priced, it doesn't make the soft drink haram. Right? And it's the same analogy. But I think it's a great shame that, you know, this benchmarking has to be done against interest because it does set the tone, or rather it's a very off-putting feature of, and where we can avoid it, we must avoid it.
And to clarify, so the banks, the Islamic banks, aren't actually bringing the interest into the product. They're just using it as a comparison because UK law and regulation requires
exactly.
it.
In the banking sphere, that's to say.
You mentioned the framework as well, the UK legal taxation and general framework. Now, we've recently gone through a particularly interesting, to say the least, time in the UK post-Brexit we find ourselves.
Yes.
Where does Islamic finance find itself post-Brexit? Because pre-Brexit, the Sukuk that was issued or announced by David Cameron and the Islamic Finance Task Force, a lot of popularity.
Yes.
But post-Brexit, it seems like there's a lot of stagnation.
There's uncertainty as to providers of services, for example, in the UK, Islamic financial services. Can we go to France or Germany and these other European countries and provide our services, or do we have to cross more
And they're showing a lot of interest, aren't they? Germany, France, even despite what's going on.
Exactly.
There has been a lot of interest into it.
Definitely. There is a lot of... I mean, this is where I think there is, if you just look at the demographics from a population perspective, there is a potential pent-up demand in all of these markets. I think, it's finding the formula to unlock that with the right products, the right education, the right messaging, etc. But
so
definitely
the
potential.
Education, the marketing, and lastly was
the way the product is produced and essentially marketed and priced, and the education around it.
What about politics, Faisal?
Yes.
What about politics? I mean, because there is an argument. There is an argument to say that, and you mentioned the petroleum boom in the beginning, there's an argument to say that because of that boom, Islamic finance was important, but now as the petroleum in the future, near future, begins to decline and alternative energy comes into play, perhaps Islamic finance's interest will also weigh in because now there's no need to, appease the powers that be when it comes to petrol.
I think at the end of the day, the economics of everything is very important. I mean, I've heard people like Boris Johnson and others in the government talk about the fact, and that's why one of the reasons the Sukuk was launched as a test case to see, can we attract capital from the Islamic world.
It was a drop in the ocean there, wasn't it?
And that was a drop in the ocean, but it was very successful. It was multiple oversubscribed, I think 12 or so times oversubscribed than what was on offer.
If it was oversubscribed, why didn't they reissue?
Well, I think that was supposed to be one issue, and then the idea was that they would use that as a test case and issue more. But obviously since then, all the political instability and uncertainty in the UK around Brexit, the change of PM, new leadership, what's happening around the global world, I think it's been deprioritised. But essentially, they have got the answer to say there is plenty more capital from where that came from if they so wish to go down that route. So I think ultimately, whilst the West remains in this reasonably stagnant state after 2008, the credit crunch, etc., and capital is limited, there is still pools of capital in the Islamic world which can be tapped into through things like the Sukuk. And I think, that will happen. So I think there is a momentum there. I think the investors in Sukuk, for example, if you look at the stats, more than I think half of them are non-Muslims. So the value proposition is also coming to the fore. It's not just about... Why
do you think that is?
Well, actually, a Sukuk is essentially similar and also often referred to an Islamic bond. So there are obviously corporate bonds and gilts out there. And when you look at what some of the Islamic bonds and Sukuk are essentially offering, decent returns, asset-backed or asset-based at the very least, they represent a good value proposition to these investors. So they are taking these assets on.
I mean, asset-based has always been one of the strengths and basic principles of Islamic finance, and that's why Islamic finance was so resilient, comparatively speaking, relatively speaking, in the economic downturn. But is there more on offer? I mean, real estate, of course, is strong. But are there other things aside from Sukuk? Sukuk is like the flag bearer. But is that all there is?
No, essentially, the whole world of investments and, Sharia-compliant investments essentially will use the principles we described earlier. So they will tend to avoid stocks which are in the banking industry or, investments in the banking industry. They will tend to pick sectors such as health or infrastructure or essentially energy and these type of industries where there's real economic activity, there's often positive social impact, and the returns are decent. So there's a whole space around that. Then you've got things like Islamic insurance, where it's very much similar to mutual insurance, which is on the wane in the West. You've got proprietary insurance, which is very much dominant in the market now. But mutual insurance provides, and this country's got a rich heritage in mutual insurance, which essentially is all about clubbing together, putting into a pool of money together amongst different people, using that money to support those in need, and then that money belongs to the group of people. So it's a cooperative or a mutual structure.
I mean, when it comes to insurance, takaful there is this. It's almost like this. Sort of growth just waiting to happen.
Absolutely.
People keep talking about this takaful really coming out into its own, but and there's always talk like this around there was around the sukuk and other financial products, but it seems like the delivery, the result is never quite up to expectations, and there's all these positive points about Islamic finance, but I'm wondering, why hasn't it come into its own? I mean, we mentioned education, for example, as a challenge, but why does Islamic finance continue to fail?
I think there are a number of factors. I mean, I think, we've touched on education, people being convinced that this is authentic, real. I think also there is a whole piece around different markets will require different products. For example, if you're producing something in the UK where we're a minority, my mantra is that we should be producing products which are Sharia compliant but also good for everyone. Because if you rely on 5% of the population for a successful product, like insurance, which requires scale, then you're not going to succeed.
So another question that comes to mind is that all of these aspects of Islamic finance are really doing well. Sukuk, the flagship bearer, there's a lot of sort of buzz around takaful insurance, yet Islamic finance doesn't really seem to be able to deliver on the expectations that everyone has.
I was reading a report on the takaful industry done by Ernst & Young not too long ago, and one of the things they pointed out is that we need to grow scale, to play in the insurance space amongst the bigger players and be competitive. And it's a very competitive market already. You need a large amount of scale.
Is Islamic finance even something that non-Muslims want?
I mean, living in the West and living in the UK, I certainly am a firm believer that we need to be producing products and services which are Sharia compliant, but also good for those who have a desire for something more ethical, something more value-based. So, for example, when it comes to takaful, it's essentially almost identical to mutual insurance. But I mean, insurance covers all of their needs, doesn't it? Technically. Yeah, but essentially the dominant form of insurance out there is a profit-based model. Mutual insurance is slightly different. It says, look, club together, the funds belong to the collective, and then whatever's left goes back to the collective. It's a different value proposition. Similarly with investments, that we know that the ethical space is is growing fast, and research has indicated that a large percentage of the population want something ethical when they come to invest, or they want good values associated with their investments. So there's a big movement to basically bring Islamic and ethical together. I'm afraid we've run out of time, so we'll have to end it there. Thank you so much. It's been incredibly insightful. Thank you for having me on. To have you on the show. So, as mentioned previously, we'll be exploring Islamic finance more thoroughly as the series progresses. Now, if you have any questions or issues that you want discussed on the programme, please tweet us at Islam Channel, or alternatively you can contact us on Facebook on islamchannel.tv with the hashtag The Islamic Finance Show, and of course we'll do our best to address the questions here. Next week we tackle riba, or interest. We'll be asking what is riba and how does it impact Islamic finance. But for now, my thanks to Faisal Karbani, of course, for joining us today, and to you for watching at home. I'll see you next week. Take care and goodbye.